You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Bupp has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Bupp.
Hey guys, Kevin Bupp here with episode number 142 of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is Multifamily Investment Expert Brian Adams. And in today's show, we're going to be speaking with Brian about how he got his start in the multifamily space, and how he's been able to leverage strategic partnerships to grow his business from just one duplex to more than 600 units in just a few short years. And the real exciting part of today's show that I want you to pay very close attention to is how Brian focused on building these strategic partnerships and relationships during the early stages of his investing business and how this helped fuel his growth in a huge way. And here's what you're going to learn on the show today with Brian. You're going to learn what unique attributes attracted Brian to the multifamily asset class. You're going to learn how finding a lead sponsor allowed him to go from just one duplex to purchasing a 276-unit building on his second deal. You'll learn how to quickly build a track record with potential money partners, even if you're brand new to the business. You're going to learn about the importance of job growth and how this one characteristic is one of the primary drivers of a strong real estate market. You're going to learn about the beauty of forced appreciation, how this can result in millions of dollars of profits in a very short period of time. You're going to learn about the power of direct mail and how Brian was able to acquire a 209-unit off-market multifamily property for well below market value. And you're going to learn about the importance of figuring out your why and how to use this as the motivation to get out and take what's yours. And if this is the first time you're tuning into the show here, I want to welcome you to our awesome family that we have here at the Real Estate Investing for Cash Flow podcast. Or if you're one of many thousands that tune in each and every week, I want to welcome you back and let you all know how grateful I am that you are here with me, okay? I love it. I love everything about it. And I love you guys for tuning in with me. A few laundry list items that I want to mention before we get on to the show with Brian. First one, I offer a free 30-minute phone consultation. Been doing it now for over 2 years, and this is a way for me to connect with my listeners. So if you have an interest in speaking with me about anything and everything regarding real estate investing, go to my website, kevinbupp.com. On the right-hand side, scroll down about 3/4 of the way. There's a button that says Schedule a Call with Kevin. Click on that, take in my calendar, and let's get on the phone together. It's 30 minutes of uninterrupted time together. I won't try to pitch you anything. I won't try to sell you any kind of products or coaching or anything like that. This is just a way for me to give back and also to connect with those that share the same passion as I do, which is real estate investing, right? So go ahead and schedule that call at my website, again, kevinbupp.com. Use that link on my website to go to my calendar and look forward to chatting with you, okay? Another laundry list item here is I've got another podcast. It is a weekly real estate podcast that focuses on mobile home park investing, which is what I do. That's the asset of choice for me. And on this show, we share everything and anything that you need to know to successfully invest in this very lucrative niche. So you can find us on iTunes and Stitcher Radio. You can also go to mobilehomeparkacademy.com and listen to the shows there. In addition to the podcast, we also offer coaching options for those who have an interest in learning how to invest in this niche of mobile home parks, okay? Some other great news here is that we've recently launched our Mobile Home Park Investment Partnership Fund. It just went live a few weeks ago. So if you have any interest whatsoever in partnering with me and my team on future mobile home park investments, you can actually read more about that. Go to our company website, which is sunrisecapitalinvestors.com. Again, you can learn more about that opportunity to partner with me and my team directly by going to sunrisecapitalinvestors.com. And I ask you this one favor. Give me the opportunity to show you why mobile home parks are one of the best kept secrets and how they regularly outperform just about every other type of real estate investment that you've ever seen, okay? Mobile home parks had the lowest default rate of any commercial asset type during the recession of 2008. So shopping centers, multifamily, industrial buildings, medical office space, all the above, self-storage, that's another one. Mobile home parks had the lowest default rate, okay? They do great in good times, and they do even better in the bad times, okay? They're an incredible investment. The returns are phenomenal, and so I'd love to show you about this awesome investment opportunity. Just for those of you that don't know about me, I've been involved in more than $40 million of real estate transactions in my time as an investor. And for the past 5 years, I have solely focused on mobile home parks. And again, I have yet to see any other real estate investment type that can hold a candle to mobile home parks. And I've owned just about every other type of real estate. So you want to learn more about this opportunity? Again, my company website is sunrisecapitalinvestors.com. Go there and you can click on the investor tab. That will tell you about the opportunity to work with us. And here's another exciting item that I want to mention regarding our partnership opportunities. Based on direct feedback from many of our listeners that have shown an interest in partnering with us on deals, but who also have an interest in actually learning the business of mobile home park investing. They don't want to just be a passive investor. They want to learn the actual mechanics, the systems and processes of investing in mobile home parks. We're now offering complimentary lifetime memberships to the Mobile Home Park Academy to anyone who decides to partner with us in our investment fund, okay? By doing this, we're allowing those who invest with us firsthand experience on the internal workings of our very own business. So not only will you get to participate in deals with us, but you'll also have the opportunity to learn the exact systems and processes that have taken us years to build and that we use in our very own business each and every day. So that maybe one day you want to do your own deals. If that's the case, then you'll have all the wisdom and knowledge necessary while simultaneously partnering with a team who has a proven track record, okay? To learn more about this unique investment opportunity, go ahead and go to sunrisecapitalinvestors.com. And the last thing here, guys, before we get on to the show with Brian, if you happen to be in the Tampa Bay area, that's where I'm based out of. I am Clearwater, Florida. So if you're visiting, maybe it's work, pleasure, whatever it might be, if you got some extra time, I'd love to hook up. So I love talking real estate, and I love meeting others who have the same passion for real estate investing, okay? You can just shoot me an email, personal email. It's kevin@kevinbupp.com. Let me know your schedule is, and we'll try to coordinate a time to get together when you're in town. So, guys, now let's get on to the part of the show that you've been waiting for, which is our interview with Brian Adams. So here we go. Ladies and gentlemen, today on the show, we're thrilled to be joined by multifamily expert and founder of Adams Investor Group, Brian Adams. Brian's professional career started out as a CPA who specialized in real estate taxation, forensic accounting before moving on to investing in apartment buildings. He bought his first duplex in 2009 and then his second deal, which was a 270-unit complex, just 1 year later in 2010. In 2011, he quit his job as a CPA to focus full-time on multifamily investing. Fast forward a few years, and Brian's portfolio of multifamily units now consists of more than 600 doors with a value of more than $32 million. So without further ado, let's welcome Brian Adams to the show. Brian, how you doing today?
I'm wonderful, Kevin. Thank you so much for being on the show with you today.
Yeah, thanks for joining us. I'm looking forward to kind of digging into your story a little bit. You've been at this now, really, in the grand scheme of things, not a long time, right? You know, I mean, what, 6, 7 years, 8 years? Well, I guess 8 years now. I'm losing track of my years, but not a very long time, and you've been buying a lot. So that's real exciting. That's real exciting.
Yeah. Certainly, the journey to get to buying multifamily, it's never an easy one, right? As we all know, it takes a lot of hard work, perseverance, and dedication, late night struggles, things along those lines. But I'd be more than happy to kind of share with you how we got to where I am, if that's okay.
Yeah, that'd be great. In fact, if you could, just maybe start back, maybe before you bought that duplex, maybe start off of what that aha moment was for you that actually switched that light bulb on and said, hey, this seems like it could be something for me that I want to jump into. So maybe take us back to that point in time.
Sure. Well, I got started in real estate back in 2000, but even to rewind the tape a lot further than that, as a young boy, my grandfather had some rental properties, and he'd pay me a couple bucks, Kevin, to go mow the grass at his properties and, pick up the trash, et cetera. And he'd take me along to go to the various rentals that he had, and his tenants would, pay cash at the time. And for some reason, Kevin, that exchange of money going from the tenant to my grandfather, then my grandfather giving me a couple bucks for that work, it just resonated with me. And then kind of taking my story a little bit forward, my background, as you said, is a CPA, but my junior year in high school, my football coach was not only the coach, but my accounting teacher, and it was my junior year, and he kind of pulled me off to the side and said, Brian, you're not the smartest kid in my classroom or the fastest guy on my team, but you really got a knack for this accounting thing. So for some reason, we had just such a great good connection that him saying those words, I identified myself as being an accountant and wanting to get my my accounting degree in college, and all my other buddies and friends are thinking about doctors, attorneys, or movie stars, and here I am knowing with the focus that I wanted to go to college, and although I did play college football, my focus through college was I wanted to be an accountant and graduate and become a CPA. And what was so interesting to me, though, as I reflect and look back on my journey, is all through the various CPA firms that I've worked with, some top 100 law firms and other CPA firms in the world, is all of the clients that I started to give tax advice, and my background is also real estate taxation and forensic accounting, is a lot of these clients were creating their wealth through real estate. So I always seemed to gravitate to those that were creating their wealth through real estate. And specifically in 2008, I'll never forget this time. I was working many late nights during tax season, similar to when we're recording this show. It's in January here, and this would be my busy season at the time. My two daughters were 4 and 2, and I was working so crazy hours. Spent all these late nights at the at the office, and for some reason, my aha moment came when I was pulling, some tax files for this very high net worth client, just living the dream, living the lifestyle that I wanted to be doing, and it just made me think, what is this guy doing right? So I really spent some extra time understanding his model, and his model was buying apartment buildings. Mm-hmm. So I kind of had, if you can envision, like the spotlight coming overhead, and like the little voices saying, "Aha!" It was very unique that I had that experience. And I said, well, that's something I really want to, really get to know. I spent a lot of time to earn my CPA, and I'm still a practicing CPA, but it really, it kind of resonated with me that I really need to understand the multifamily, side of things. So I went out and got, some education that was really important to me. And as you prefaced in the beginning of the show, is I went and bought a duplex, had a vacancy. I filled that vacancy, started producing cash flows. And I said, well, if I could do this at a small scale, I know my clients are doing it at a larger scale. So that was in 2008, and then in 2009, I tried to take down a 132-unit deal on my own. And again, looking back and reflection-wise, I tried to be the loan sponsor and raise all the capital and be the lead person, operator, et cetera. And I'm assuming your audience knows those terms, but I can certainly come back and address what those all mean. But admittedly, I think I was just a little bit too new, and I just wasn't able to take that asset down. And as well as the numbers are very important to me, being a CPA, and looking back at the numbers, the deal wasn't as solid as I wanted it to be. So then fast forward a little bit, I realized, hey, there's multiple ways to skin the cat. There's multiple ways to get in multifamily if you have determination, perseverance, because I really knew that this was what I wanted to do. Like, although I've been, fortunate to work at some of these great firms, and I was passionate about my, CPA world, I was also starting to become so passionate about, owning multifamily and just the levels of tax benefits and cash flows and other things that apartments produce for us. So in 2010, and just a disclaimer out to your audience, of course, is I did not find this 276-unit deal. I actually partnered with a group. It was a bank REO, I think back in 2010, where we were back then. It was 276 units. We bought the asset for $4.5 million, and the property appraised at $12 million at day of purchase.
Wow.
The whole strategy was, that was pretty cool. And the whole strategy was, and all of us knew this kind of going in, is that the operator we were going to take the asset down, and then upon a refinance, then all the investors, including myself and the others that I brought to the table, we would all get refinanced out. We'd exit the deal with a nice juicy return, and that operator would take the deal, and go forward with it. So within a year's time, in 2011, the asset got refinanced, and that everything happened as planned. And, then I made the decision, and with the great support of my wife, obviously, is that, at the end of 2011, I did quit my CPA job. I burned all the bridges behind me, that saying, and, I pushed all the chips in because I really just wanted to move this thing forward. And another disclaimer is I'm very methodical, I guess. I just didn't do this overnight. I had a plan. I knew that, I had to have a certain amount of savings if I was going to start my own business. So at the end of 2011, I quit my CPA job, and I do this full time, and I can certainly address what 2012 and other years look like going forward. But the journey has certainly been challenging, but also very rewarding at the same time.
Okay, well, fantastic. Well, I want to back up a little bit. I want to talk a little bit about the educational component of you had that light bulb that went off when you're sitting late in the office that one evening, looking at one of your clients' tax data, realizing that he had built most of his wealth through real estate investing. And at that point in time, what did you do? What was your next course of action in order to dig a little deeper and actually find out a little bit more about this, mysterious, I guess, topic of multifamily investing? What did you do next?
Sure. So at the time, I went on the internet and just started Googling, okay, who's real estate and multifamily, and lots of different types of websites out there. And I purchased a home study course and just consuming as much knowledge. Great show like yourself with podcasts and Bigger Pockets and just others. Just who is in the space, who is doing what I want to do, who's the the lead expert, and just kind of following. Instead of trying to track down a different path that hasn't already been, set out in front of me. Well, let's find someone else who's done already what I want, and let's speed up the pace of that level of success, if you will.
Mm-hmm. Okay. And then why did you choose apartments? I mean, there's so many other different types of commercial asset classes out there that have similar qualities to them. You got self-storage, you've got office buildings, shopping centers, and mobile home parks, which is what we love. But what really made you gravitate towards apartments?
Sure, and it really comes back to although my clients were asking me for all this great tax advice, I was asking them for the different the pros and cons of each types of real estate segment, and for those that owned apartments, it just made so much sense to me with respect to economies of scale and getting into more doors under management where you can spread operating costs across more units as well as economies of scale, and have professional management company in place. And with apartments, there's you can really hedge against inflation. If leases are usually 12-month leases, so you have opportunities to increase rents and hedge against inflation. So a lot of factors that were kind of supporting the apartments versus other segments. And it just, since I've owned some small rentals, I started in 2000 just buying a house or two and renting them, that model just made so much sense to me, because single families and multis are equally the same. It's just you have all your doors or all your units under one location versus having 20 different single family houses. Those 20 single family houses might be spread across a particular geographical location or city. And at the time, I was self-managing, and I was the one trying to track down rents and things like that, where now my model is I have third-party management that runs the day-to-day operations, and they're the ones that are tracking down the rents. And obviously myself as an asset manager, I need to make sure that the management company is doing all the things they say they're going to do, and we can certainly address that later in this call. But that's what made the most sense to me, is just the economies of scale and just having more units under one geographical location.
Mm-hmm. Okay. Now, I want to pull apart a little bit that very first larger acquisition. I think it was a 270 unit deal, and you'd mentioned that you didn't go at that alone. In fact, one of the reasons that you thought you might have failed on that, I think it was 132 unit that you first tried to take down by yourself, is because you tried to go out and be the loan sponsor and just do it as a solo man versus bringing a team together. Talk to me a little bit about the team that you constructed, or maybe it was already constructed and you jumped into it, but tell me a little bit about the partnership structure and what it was that you brought to the table. Because I always, partnerships are great. I love partnerships, but there's always got to be a value that someone brings to the table. Otherwise, there's just no benefit for the other parts, right? And so tell us a little bit about the value that you brought to the table in that partnership and a little bit how it was structured.
Sure thing. So the partnership was already put together. The team was already put together. The value that I was able to bring was investors or capital to the opportunity. And in exchange for that capital, I was the one sitting in the back seat, just as what we call a passive investor. I was not involved in the day-to-day operations, but I told the team, up front, hey, this is what I want to do. I want to be an active operator down the road. So I was very fortunate because I was able to ask those questions and really get a, kind of see the nuts and bolts of how things were working on a day-to-day perspective. Because, now fast forward a little bit, I am now an active operator. I'm the one that's calling the shots, et cetera. And there's a lot of things that need to happen through a deal, not only from finding the deal, before even getting it purchased. And then, there's a lot of challenge that can happen after you close the deal and executing their strategy. But coming back to the 276-unit deal again, as I was the one just sitting in the back seat asking lots of questions, just wanting to know and learn the game, understanding, how things worked. And I was very fortunate because I was able to take that experience and then, kind of slingshot or, it gave me so much traction. Mm-hmm. Not only was it a great story to tell those investors that were in this deal with me, but it was a great, story to tell those that, have been kind of following along, saying, oh, Brian, we know you as Brian the CPA, but, for you to buy, 200-unit deals and things like that that's just unheard of. But when I actually put that, in action and they could see the end result, it was like, holy moly, all right, this guy is really serious, and hey, we may want to invest with him. Let's continue along in the discussion and dialogue.
Mm-hmm. Okay, and then with regards to that partnership, how did you find that other part of the team? I mean, I think that's the more important part of that question. There is because a lot of people are trying to struggle. They're trying to get into this. They're like, oh my God, like the thing of taking down a 270-unit property myself is overwhelming. I mean, and even just as equally as overwhelming is how do I actually sell myself to an experienced group of operators that that already know how to do that, been there, done that, so that I can learn this business firsthand. So tell us how you did that.
Yeah, and I think it comes down. Yeah, I think it comes down to the value proposition. Mm-hmm. What can I exchange to them, to get in the deal? And sometimes it could be just, raising capital, or maybe finding a great deal, or maybe it's, someone that's a good networker. But I think all of us, Kevin, have the ability to find, in our circle of influence, there's got to be someone that we know that we can say, hey, this is what I want to accomplish. This is what I want to do. And maybe it's maybe not our immediate circle of influence. Maybe it's someone they know. So it's just active marketing. It's just, instead of, just putting our head in the sand, if you will, it's actively seeking out those that, again, are maybe having the success that we're all wanting or needing or we're striving towards. And it's just, taking that quality time in our own lives and say, okay, who is that person or people, and let's align ourselves with, maybe taking them out for lunch or, giving them a call or send them a note or, hey, how can we help? It's just kind of creating some type of dialogue, creating a relationship, and sometimes those doors just open. And I will stress this journey has not been easy by any means. So I'm not saying that, tomorrow someone's going to be able to go out and buy their own 276 unit deal on their own or things like that. It's taken a lot of work and a lot of challenge, but I'm letting your audience know it can be done. You just need to have a specific goal in mind of what you want and keep working it.
Mm-hmm. So you're telling me it's not as easy as just buying a home study course and then going out there and doing it?
Right, or listening to a guru say that you do this, that, and the other, and all this money is going to rain down on you. I hate to say that, but that normally doesn't happen that way. The fail rate there is pretty good, and you do need to take specific actions and consistent actions.
Mm-hmm. Absolutely. Well, I want to change course a little bit here, Brian, if we could, and I want to talk to you a little bit more about your overall investment strategy in terms of like the fundamentals that you guys look for when you're searching out deals with regards to, obviously we know the size. We talked about 270 unit size, but give us an idea of like a look underneath the hood, a little bit of like the rest of your portfolio. Also, what markets do you guys like? Why do you like them? How do you evaluate those underlying fundamentals that are so important?
Sure thing. So I'll just take that story a little bit forward, and I'll come back and I'll hit all those questions for you if that's okay.
Yeah, absolutely.
Is after I quit my job in 2012, I basically woke up. I quit on December 15 of 2011. I woke up and, first day of 2012, and it depends on how you look at that. I was either self-employed and unemployed. Depends how, what you want to say there. But, I had to figure some things out pretty quickly, although I had, I said already, I had a plan. But, admittedly, Kevin, I did not find or buy a multifamily in 2012. the doors just didn't open, things just didn't align, but I had to figure out a way to make some cash flows. So what I did in 2012 was I started flipping houses. I was doing about 1 to 2 houses a month, and that actually helped me, and I'll tell you the reason why here in a second. But 2012, I was just like, oh my goodness, I just had to, kind of change strategy. And then in 2013, things started humming along nicely. I bought a 144-unit deal for $10.3 million, and then in 2014, I bought a 209-unit deal. I bought that for $6 million and appraised at $7.4 million on day of purchase. And within 15 months, I took the occupancy from 86% to 98%. I spent over $700,000 on interior exterior upgrades and increased the rents over $100 per unit. And I took the value up to $10.2 million. And it's a two-part transaction. One part was I refinanced the asset in 2015 for $10.2 million on the valuation perspective, and then I ended up selling that asset in November of 2016 for also $10.2 million, and that was in Dallas, Texas. And then in 2016, I bought a 240-unit deal in Georgia for $9.4 million, and also another 200-unit deal in Georgia for $8 million, also in the latter part of 2016. So let me come back to what I was telling you about with the single-family houses. Is when I was first starting my business and creating that traction, some of the investors that I started to work with is they didn't really know me, or they knew of me, but they just weren't sure. I was new. I was brand new to this. So for me, with the single family houses, I got house, and then I was able to fix it up, sell it, make profit, pay the investor back, and then do it again, and then with that same investor, and then it created a track record, and that's really what this business at the end of the day is about. It's your track record in telling someone, hey, I'm going to do this, and actually doing it. Because there's a lot of, I hate to say it this way, but there are some folks out there that say they're going to do one thing and then completely do the opposite, and the credibility and the ethics is very important to me as a CPA and all those other good things. But when you say you're going to do something, maybe the situation or fact pattern does change, but you need to figure out a way to get to that end result. You told somebody you're going to do something, you better do it. So for me, I was fortunate because a couple of these investors, we started that trust foundation, and they would then tell a friend, and they would then tell somebody else, and so I started creating other investor relationships, because I believe most of us, even myself in the beginning part, we struggle with we can find some deals, some solid opportunities, but if we don't have the capital or the dollars to actually close, it can be a very frustrating experience, and I was there in those shoes before. So just as a nugget, I guess, to your audience is, again, circle of influence. There's got to be someone in someone's circle of influence that may have the capital that can invest in a deal, or they may know someone that can invest in a particular deal. So it's taking consistent action to get to whatever wherever someone wants to go. It's just keeping that clear outcome in mind.
No, absolutely. And talk to me a little bit about the markets themselves. I know Dallas, Texas. I mean, Texas itself is super, super hot. Georgia, what part of Georgia were you buying in? Because they're really far apart.
Yes, they are, and I forgot to mention that. And so I live in the Northeast. I'm in Philadelphia or Pennsylvania, about 40 minutes south of Philadelphia. I don't own any multifamily in Pennsylvania in the Northeast, and the reason why is the cost of living is just so more expensive, and what we call cap rates are so low. So my model is really driven off where there's job and economic growth happening, and Texas specifically. The Dallas marketplace has been growing at rapid rates for so long, and some would say that the market is oversaturated, which, depending on where you are, certainly that is true. But if you look at the fundamentals of that particular market, it's called the Metroplex, the Dallas-Fort Worth area. That Metroplex just continues to grow, and some say it's going to double in size in the next 10 years or so. It's just there's so much infrastructure in Dallas, or Texas, I should say. It's such a business-friendly state. It's got so many good things about it, landlord-friendly, et cetera, and then Georgia, specifically in the Atlanta market, also has some very solid fundamentals with job and economic growth. So said another way, why invest in a market where jobs are leaving a particular state, like California? Although California can be a great state to invest, when you think of the state income tax and where people, there's studies out there, the Census Bureau, et cetera. That's I just kind of hitch my wagon to some of this research that's available to all of us and kind of extrapolate. Okay, where are people moving to, and where are they moving away from, and what are the reasons why, and just kind of drill down to what characteristics of a particular market might have, maybe some, economic drivers or things along those lines that are creating or attracting, strong job performance or economic performance. Because said, just very clearly is that if someone's got a job, most likely they can pay your rent. I mean, there's other things that we need to account for, and unit size and type of asset and, what type of exit strategy, et cetera. But at the end of the day, where a particular market is trending and tracking, that's what I kind of look at, and from a job and economic perspective.
Are there any other markets other than Dallas-Fort Worth and Atlanta that are really exciting to you?
Well, I'll say it in a couple of different ways. One, when I first started, I had 10 markets that I was trying to look at, and that was a rookie mistake. And the reason why is there's just way too much data. So then I took the 10 and I took it down to the final 5, and then I took it even further down to the final 3, and then ultimately I wanted to be the deemed expert of just 2 markets to diversify the risk, et cetera. And I really took it down to Dallas and Atlanta. There's some other markets that are certainly on my board with respect to, hey, this is where I may want to invest if again the characteristics of the marketplace are solid. But for me right now, it's those 2 markets, and because I've got great resources I already own or have owned product in that sub-market. I've got resources with brokers and contractors, et cetera, and it just makes it a little bit more easy to do business. But I've got some, potential other markets that I'm looking at, but those are my 2 primaries that I focus on.
Okay. And I'm assuming now, moving forward, you're one of the general partners in all the deals that you do, correct? So you're one of the lead sponsors now that you've got the track record and experience. Is that how you struck things?
Yeah, that's correct, and that's a great segue because as you get traction, as you start moving forward in your own business, yeah, that's correct. I'm the managing member, which means that I make the decisions on how the particular asset will trend and track, what rehab we're going to do, as well as I'm the loan sponsor of the deal. And if your audience doesn't know what that means, it's someone that has either the net worth that equals or exceeds the loan balance, also has 10% liquidity. That's what lenders usually require, and also have the multifamily experience. So it just opens so many more doors. If I'm the person calling the shots, as well as I'm basically taking the risk of the deal even on my own shoulders. Although it's non-recourse, I still am taking the risk of the deal on my shoulders to if the deal did go into foreclosure, that's something that's on my side. There's no real risk to the investor for creditors going after. Well, I better back up because from a legal perspective, some deals do have some things in the deals, but normally, since I'm the guarantor on the loan, it's non-recourse. I do carry the risk for the investors.
Okay. And then where do you see yourself? I mean, what's your business model look like? Is it a 3 to 5 year exit out of these? Are you more of a long-term cash flow type guy? Now, I know you exited out of a deal recently, but give me what your typical horizon looks like.
Yeah, my typical horizon, because it comes back to me for when I was flipping houses in 2012 is I like value add deals. I like deals that have challenge, the problem. I call them my fabulous 5, and what that means to me is I like an asset or a value add deal where I can go in, increase rents, lower the expenses, bring in more efficient management, fix a problem such as deferred maintenance and what was the deferred maintenance? There was one more. It's skipping me right now. But where we can go in and just force the valuation, because with flipping a house, just think of flipping an apartment complex. I buy a 200-unit deal, and let's say there's 50 units that I need to upgrade. Well, I'm buying a multifamily that hopefully is already producing a cash flow stream, because with multifamily we're buying leases. We're buying leases that hopefully have an income stream that's a cash flow stream that can pay the expenses, the mortgage, and hopefully have some cash flows thereafter. And what we're doing is with those units, we're just upgrading them over time. We have all those units under one location. We have our we can do this sometimes in-house. That's what I normally do. If it's just an interior upgrade, where we're doing painting and carpet, and we may outsource small components, but most of that is all covered in-house. We can buy our materials in bulk and appliances in bulk, so we get cheaper pricing. Buying 20 appliances and things along those lines. So for me, my exit strategy is 3 to 5 years, so we can go in, force the valuation, and then take that capital off the table and redeploy that in maybe it's in Atlanta, maybe it's in the Dallas marketplace, or maybe it's what we call another emerging market where, again, the fundamentals of that particular market, job and economic growth, are maybe they're not as robust as where they are today, but maybe 3 to 5 years, key characteristics of that marketplace, make sense for us to invest in that particular market.
Mm-hmm. Okay. Sounds good. And so how are things looking today? I mean, I know that finding deals today is probably a little bit more challenging than what it might have been, 5 or 6 years ago. So give me an idea of what your pipeline looks like today. I mean, do you guys have a good amount of deals coming in on a regular basis? Are there any others that you're close to actually acquiring at this point in time?
Yeah, so I think I could have probably done 3 or 4 more deals, but for me, what's most important, and when I first started, it was like an ego-based, I think, I said to myself, I want to have 5,000 units and be a $250 million, company on the, assets under management. But as you get into it, I realized that's just not what I want. And the reason why is what's most important to me is making sure it's the right deal in the right market for the right investor now, because those things change when you first find a property to when you get an LOI to when it's under contract, and then we're getting close to the closing deadline. Things can change. You might uncover certain things in maybe the financial due diligence or the market due diligence, legal due diligence, or physical due diligence. You might uncover something that at the end of the day say, well, I could do this deal, but does it make the most sense to do it, and most importantly, since I raise capital through investors through a syndication, ultimately at the end of the day, does it make sense for the investor? Because it just doesn't make any sense if the deal is not going to produce the projected returns that we're all hoping for. It's just going to be a messy divorce at the end of the day. So that's what I really focus on. So where I'm kind of trending right now is I like 200 plus unit deals. It just gives me great scale, and I'm actually looking at I'm in best and final and on a 600 unit deal and almost a 348 unit deal. And so for me, once your name gets out there, then you're a proven closer. And again, for your audience, once it's about network, and it's about making those outreaches to brokers. Say, hey, I just bought a duplex, or I just bought whatever. Make sure your connections in your immediate database be top of mind to them, because they're going to say, wow, this guy, Joe, whoever, this guy is actually doing something, and maybe we want to send him what's called a pocket listing deal and see what he does with it, or she for that matter. Just really you just want to be active in your own network, because things just don't fall in your lap. You have to actually take specific action steps to get things done.
Mm-hmm. No, absolutely. And so I'm assuming that the deals that you've purchased to today, they've all come from brokers. Is that correct?
Some of them, yes. The Dallas property, Kevin, I actually bought that on a direct mail campaign.
Did you really?
So some people say, wow, some people say, wow, you can't do direct mail from multifamily. And I'll tell you, it's not easy, but it can be done. It's a lot of scrubbing the list is what we call, to find the right person. So again, I'm very targeted on what I do. So this particular asset, I zeroed in on this particular submarket of Dallas. I also then zeroed in on the type of buyer that I was, or the type of seller that I wanted to attract. That for me was someone that's owned the asset for more than 15 years, someone that may have perceived equity with seller financing possibly, or someone that might have owned it for so long and they were a burned out landlord. And I was targeting more of what we call a C-class building in a C-class area. So this particular letter landed on this gentleman's lap. He was at the time 79 years old, and he was just recovering from a health challenge. And it took a while from when he received that letter and when we had our conversations until I actually got under contract, because he really didn't really want to sell, but his family members, because he was recovering from a major health health challenge, his family member said, "Hey, Dad, or Grandpa, you should sell because we really don't want to manage this asset if you pass." So I was the solution piece, and I'll tell you again, it just wasn't one letter and no follow up. It was reaching out to him on a consistent and regular basis. I flew out there on multiple times just so he could see my face, and it was 100% off market, and dealing directly with what I would call a mom and pop operator. This was their only asset that they owned and owned it for quite some time, and I was able to get a good price on it.
And which deal was that? Was that the 276 unit?
That was the 209 unit deal in Dallas that I bought. I bought it in July of 2014, and I just sold it in November of 2016.
That's amazing. So I see that's interesting because I'd say that very few people, and at least that I speak with, and I speak with a lot of multifamily operators, actually do any kind of direct marketing. I mean, most of it, 99% of it is brought to them from brokers. And so have you considered ramping up your direct marketing campaigns, or was that just kind of like a one-off deal and now everything else is coming through brokers at this point?
Well, I think it's having a funnel that is open to brokers and real estate professionals and other investors, et cetera, and also direct mail. So, why some people sell in direct mail or they, maybe do one letter campaign, they get 0 calls and say, "Oh, this doesn't work." Again, it's a consistent approach. You have to kind of map out. For me, I do what's called a 3-step letter campaign. So I send one letter out, then 7 to 10 days later another letter goes out, and then it's consistent follow up. And if we don't hear anything, then it's okay, tweaking and adjusting your copy and your call to action, your headline to say, okay, maybe why didn't I get a call? Maybe this was the wrong target. So a lot of things you need to think about with marketing. But for me, it's just another avenue to find good deals. And if you spend $5,000 on a marketing campaign, but I was able to as I said, I bought a deal for $6 million. On the day of purchase it appraised at $7.4 million. Why wouldn't you do that? If you spend $5,000 to get over $1 million of equity on purchase, that's a no-brainer, right? So, but does that happen each and every time? No. It's just a matter of being consistent again, and having multiple things going on to find the best opportunity.
Mm-hmm. No, I'm a big fan of direct mail, Brian. That's why I asked you that question. We bought 7 mobile home parks last year, and every single one of them was off market, and it was direct marketing on our part.
That's great.
I think 5 or actually 6 were direct mail, and 1 was a cold call. We do a lot of cold calling as well, and but direct mail works. It just does. But you've got to be consistent with it, and you've got to spend a lot of time scrubbing your list and just knowing who you're mailing to. I mean, we narrow it down to the age of the actual seller. We know everything about them, how long they've owned it, what they paid for it. Well, some states we can't find that out, but we get as much as we can so that we know truly who we're sending to. And there might be a few things we don't know about the property, but we've done a lot of research before they've ever received a piece of mail from us. And so, I'm shocked that more people don't actually do direct mail in the multifamily space, like for these larger types of apartments, because there are still mom and pop owners out there. Now, I'd say that it's probably more skewed towards professional owners, like in this larger space that you're in, 200 units and above, but there's still mom and pops out there, I would have to believe, correct? I mean, you know better than I do, but there's got to be mom and pop owners out there still.
Yeah, there definitely are, and you're bringing up such great key points, is that direct mail is, for larger deals like this and the mobile home parks, it's not like you can just go and buy a list and send out letters. There's a lot of front work that needs to go into it. Like you just said, scrubbing the list and, really getting very specific and, kicking out the big property owners, management companies that will get your letter. Because what do they want, or what they don't want is a letter come in and that seller sees that letter and I hate to say it this way, but they may just throw it away because they don't want to lose the business if the property is sold. So, you do have to spend some extra time and, making sure that the letter is getting to the right person.
Mm-hmm, absolutely. Now, Brian, I want to ask you a question that I'm going to put you on the spot a little bit here. This is a question I like to ask all of our guests that we have on the show, and it's, you've been doing this now for, I guess, you've been doing it, I say 7 years, but that's kind of back when you bought that first duplex. But you've really been doing a lot longer than that because you owned other rental properties back prior to that. So, but if you can go back into year one, when you first started out in your real estate career, call it a career. You were a CPA at the time, but back when you first started buying your rental properties and, knowing what you know today, what advice would you give yourself back in day one? Well,
that's a great question, Kevin. And I guess for me, just because in my opinion, looking back as you're asking this question, is I think I made things way too complicated when I first started, because now I think about my business, I really just I like things simple because my mind makes things complicated. But if you think of creating things or making things simple, and really for me, my business is two things, and that's deals and dollars. I need to, have, like we were talking about with direct mail and brokers and things, I need to have quality properties or inventory coming into my business on a consistent and regular basis. And also at the same time, I need the dollars. I need to show these opportunities to my investors, but at the same time, I need the capital to actually close. So it's, kind of left and right, hand at the same time. So to answer that question, I made things in the beginning way too complicated. I felt I needed to know everything about this, that, and the other, and a lot of analysis paralysis, and just thinking, oh my goodness, this is just way too hard, I'm going to give up. And so I think at the end of the day, it's just breaking down your business and taking, maybe it's a big action step, and then breaking it down into smaller components. Maybe that's on a monthly basis, weekly basis, daily basis. It's just taking small but consistent action that creates momentum, and that will keep you kind of going if you kind of, can kind of keep that motivation going at the same time.
Yep. No, that's great advice. And I'm assuming that you're probably, I can tell you're really into education, and you're probably a voracious reader. Are there any books that have had a major impact on your life that have helped you adapt these skill sets that you have today?
Well, I'm a big Tony Robbins guy, so and if anyone has not heard of Tony Robbins, just check him out. I've actually flown to Fiji to be with Tony to do a business mastery course. I've done most of his other programs, and for me also, just from I guess the business perspective, is I really like a book. It's called The E-Myth Revisited by Michael Gerber, because we all have different ways that we do our business, and certainly with marketing, there's some good marketers out there, and so that's been helpful to me, is just surround yourself again with those people that are doing what you want, and take a nugget of information from them and apply it to your own business, and kind of see how things go down the road. Yep,
no, that's fantastic advice. And Brian, now this is what we enter in what I like to call the golden nugget segment of the show. And this is going to be where we kind of round things out here for the day. And what I'd like to ask of you to do is if you could leave just one last final golden nugget advice or wisdom that may inspire and motivate our listeners as they progress in their real estate investing career, what would that one last thing be? And there's no right or wrong answer here. It could be anything you want it to be.
Sure. Well, from my perspective, and knowing where I was, again, I was working all these crazy hours. I was, as a CPA, and I just wasn't happy. Although I was really good at my job and, producing the income, I was seeing my girls for, again, 10 minutes in the morning, and my wife, and, working just, again, crazy hours. And for me, Kevin, it was the why. Why do I want to basically, I've been doing the CPA for almost 20 years. Why do I want to, just throw away the CPA career, if you will, and buy apartments or do real estate? What was my why? What was the specific outcome that I was striving towards? And that outcome has changed over time, of course, but being really clear about what that outcome is and the why, and wrapping lots of emotion around it. Hey, I quit my job in 2012. I'm on my own. I don't have a consistent, W-2 income. I'm a CPA. I'm all about, leveraging risk and mitigating risk as well. And, I'm out here on my own, and I got to figure things out. So for me, it was my why. It gave me the motivation to get up early and stay up late, and just, go after it. And that's what you need, I think, is the golden nugget for anyone listening is that if you want something, no one's going to hand it to you. You got to figure out ways to get to your final outcome, as well as, provide value. If you're just new to the game, but again, you can, maybe find a killer deal, or if you're a good networker, or if you can bring capital to the deal, figure out a way where you can go out and help somebody, or just stay in contact with somebody, and you never know what doors will open, and it's just about being consistent and regular, and being authentic, I guess, is really what I want to try to say.
No, that's great advice. I mean, really in this business, when you're first getting started, that's I think your main focus should be, how can you add value to someone else that's already been there, done that, someone that's experienced, they've got a track record. How can you add value to them in their business? Because that's the person that you need to align yourself with, or that's the team that you need to align yourself with. Whether or not you're going to partner with them, but just try to get your foot in that door, and so that you can learn the right way. Learn from someone that's been there, done that. It's not theory to them. It's not a book. Like you're actually seeing the nuts and bolts, as you put it, of the business. And but the only way that you're going to get your foot in the door is by bringing value to them in their business. And there's some partners that we have in our group here today that literally they are partners with me because they brought value to my business many years ago and in different ways, but they added value to my business, whether it be bringing a deal to us or just bring some other kind of strategic advantage to our team. And now they're full-blown partners with our team. So, and it's only because they figured out a way to bring a value to our business. And but either way, Brian, I want to ask you, what's the best way for our listeners if they want to learn more about you and your company? Is it Adams Investor Group? Is that the best website for them to go to?
Sure, Kevin. Yeah, thank you for allowing me to present that to your audience. Of course, it's adamsinvestorgroup.com. And on the website, I have what's called a free report, if you don't mind me, doing this plug. But
no, absolutely.
For me, it's like, you asked in the beginning of the show is, why real estate or why specifically apartments? And for me, I broke it down to, apartments for me, it's the ideal investment. Not only does it create income, it creates, tax benefits such as depreciation. We're able to create equity, appreciation. We're able to use leverage. So I got a free report out there if your audience is interested on why I believe apartments are the ideal investment. And they can download that for free, and I'm all about education, so they'll get to kind of hear a little bit more why I believe apartments are the best investment.
Okay, fantastic. And again, guys, that's at adamsinvestorgroup.com. And Brian, that's all we have for today. I really appreciate you coming on the show, taking the time out of your busy schedule to share your story with us, and I look forward to following your success. Hopefully, we'll have you back on the show sometime in the future, and you'll come back on with 2,000 units under ownership, or maybe even more. It sounds like I appreciate it. Yeah. No, I'm looking forward to your success. You've made a lot happen in a short period of time, so congratulations to everything that you've accomplished, and you'll look forward to talking with you again. So you have a phenomenal week, and thank you again.
Thank you, Kevin. Really appreciate it. Have a good one.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.